The FDIC and the Fed would lose regulatory authority under Chris Dodd's new plan. Bloomberg's Peter Cook is in D.C. Has a little bit more on this proposal. Peter.
Deirdre, Senator Dodd will release his long-awaited regulatory overhaul plan at noon today up on Capitol Hill. And while it shares a lot in common with the proposal working its way through the House, Chairman Barney Frank's proposal over there are some differences. The biggest, according to a person familiar, is Dodd's call for stripping the bank's supervision responsibilities of the FDIC and the Fed and eliminating the Office of the Comptroller of the Currency and the Office of Thrift Supervision, giving those responsibilities to a single new bank supervisory agency. Officials from the FDIC and the Fed have argued they should keep their bank supervisory role, so this sets up a turf battle here in Washington. Other parts of the Dodd plan are similar to the House bill, including his call for a council of regulators responsible for overseeing systemic risk and giving the FDIC the authority to unwind failed firms that threaten the system. Dodd would require large financial companies to repay the government for any taxpayer-funded bailout of a failed firm. The House bill calls for the industry to prepay into a fund to cover that cost. Now, the overhaul also calls for the creation of a consumer financial protection agency that's similar to the House. That proposal is widely opposed by the financial services industry and by Republicans on the Senate Banking Committee. And that's one big reason why we won't see any Republicans with Dodd today when he unveils his bill. And another big reason, Deirdre, why its future is somewhat in doubt in the U.S. Senate.
And Peter, how is the banking industry likely to respond to the idea of a single bank regulator?
Well, it depends who you talk to. Some of the bigger, larger institutions, they don't have a big problem with it. For them, it's essentially one-stop shopping. But you get to the state banks, community independent banks, they do have a problem with it because they don't want to be lumped in with those big players. They think they should be treated differently because they are different. So you're going to see a lot of community bankers up on Capitol Hill lobbying against this proposal.
Peter, thanks so much.